Good morning, traders. Welcome back to this YouTube channel. Today, I want to discuss about trading a channel. In this scenario, we'll be looking at a descending channel. Descending channel is whereby price forms a high, it forms a low, forms a lower high, forms a lower low, forms a lower high, forms a lower low. You see, it forms a high, forms a low, a lower high, lower low, lower high, lower low, lower high, lower low. So a descending channel is whereby there's formation of a series of lower lows and lower highs. A series of formation of low lows, consecutive low lows and lower highs. Okay, so the only way you can trade this setup is you can only trade from that bounce. Reason being, you have to connect two highs or two lows to get a trend line, because as you can see, price is sandwiched between two trend lines, one on the upper side, one on the lower side. But basically, these two trend lines are both, one is acting as a resistance, which is the one on top, the one down is acting as a support, the one at the bottom. You can see they are in a parallel arrangement. So the only way to trade such a setup, you'll have to wait for two bounces. Like here is a swing high, here is a swing high. Now connect the two swing highs. So the first, if you have to short in a descending channel, you will have to short in that bounce. If you have to long in a descending channel, you see there's the first swing low, second swing low. You'll have to trade that swing low. Get it? Get it? So that's the idea of a descending channel. We aren't going to discuss a lot today. So we'll be looking at one pair in the live market so that we can get an idea of how this plays out. In this scenario, we'll be looking at EURZAR. EURZAR, okay, maybe. I know you've come from seeing a line chart, so let's shift our channel to line chart. You can connect this. Okay, I drawn them with wicks, but anyway, it's roughly around the same place. Let's see if basically line charts show the closing price. You can see the closing price of a candle, but basically I'm used to. So you can draw your. You don't have to draw a single trend line. You can draw it as a zone. But for clarity, let me just show you. You can draw one line that connects the wicks, the other line that connects the bodies. Same scenario here. So this is EURZAR. ZAR is an African currency, South African. Yeah. So you can draw your channel like this. So we can see let's expand our chart. So basically a channel is whereby, in my previous video I gave a scenario of a tennis ball where you hit it to the floor hard, it bounces to the ceiling, it bounces back. So the floor acts as a support, the ceiling acts as a resistance, meaning that price is cannot go past the resistance, nor can it go below the support. So you can see price comes, forms a low here, it pushes high, forms a high here. Okay, so these are high, these are low, pushes down, prints a low which is lower than this low, so a formation of a lower low, pushes up, forms a high which is lower than this previous high, which is a formation of a lower high, pushes down again. Now this was the first opportunity of taking a long position in such a trading scenario. If you remember very well, I explained in the other while showing you the diagram that the only opportunity to take a long position in a channel you always take it from the third bounce. Same scenario if you are expecting to short this currency pair, we'll have to wait for a third bounce here. Okay, so now price came, you see they reacted very well, bounced away from the trend line. We expect that price should reach this other trend line before deciding whether it will bounce back or break above for continuation of a long position. So as the price is right now, we still are in bullish. We still have bullish ideas. Okay, so here are our scenarios. But anyway, as we're talking right now, I'm in a long position. But I'll show you where I entered. I'll show you I had given previous a previous setup of this. So I'll show you why I took a long position, where I expect to exit in case of the price goes against me or when the price goes towards my direction. So our first long position, here is where the idea of a long position, our first long position entry would have been. So you would have looked at such rejections. So people who trade pin bars and things like that, they would have looked at positions around here. So I waited for, you can see here there's a minor swing high. The minor swing high was breached, confirming that now bulls are ready to proceed. Then you can see now here a correction forming some significant swing lows and swing highs. Whenever you see such a correction, here now some people are exiting and entering some positions with these swing lows and swing highs. Below those swing lows and swing highs, like below these swing lows, there's a lot of liquidity here because a lot of people who are in long positions have put their stop losses here, and a lot of people who expect that after maybe price breaches below here have put their sell stops to trigger short positions. Okay, then above here there are a lot of people who are waiting maybe for prices to push up high and have placed buy stops here for the trade to be executed to go long positions, and the people who are going short have put their stop losses around these swing highs. Okay, so there's a lot of liquidity here and here, but anyway, because price was coming from below this side, so there's the people who are either adjusting their stop losses as they go along have put their stop losses below this zone. So I did expect that price would come, sweep away all that liquidity. Then I expected to see my price reach around the bullish OB so that I can take long positions. So if you've listened to my other videos, I always do advise a person to take positions that have at least 3 confluences. So in our first signal for bullish ideology was the bounce of the support trend line. Then price breached. Second one, price breached our minor swing high, meaning that bulls are now entering. Those are two bulls are now dominating because wherever there's a switch from lower lows, formations of lower lows and lower highs to formation of a higher highs and higher lows, means that there's a change in trend. So that was the second confirmation. That confirmation was obviously to look for liquidity so that markets can move quite fast. You have to stop losses have to be haunted. Remember, if you don't trade with the liquidity, then you're the liquidity. You've had sayings like that anyway. So price came. Then the other one, I always like to merge my. I always like to trade specific order blocks. I don't trade all order blocks. I do like to trade order blocks that align with. I have modified my Fibonacci. I always do like to trade order blocks that align with 70.5 and 79.5% order blocks. Okay, that is so we had a first signal was here, bounce from the descending trend line support, then change of character, then liquidity sweep, then price has retraced to an OB that confluences to 79%. So that was a very, very eye-catching place for me to be executing this trade. Yeah. So let me show you something. So this EURZAR last week had given this analysis while price was like this. So price was around 20.003 level. So you can see I marked my bullish OB, whereby I was expecting to look for price reactions at around this place so that I can execute long positions. Okay, so advantages of scaling down to precise entries is because, first of all, you'll have repeatability of the idea of how you trade. Secondly, you'll have a better risk to reward ratio because assume you just entered somewhere randomly around here and your stop loss is obviously below the recent swing low. You see, you'll have a very small take profit. Unlike assuming price reaches to the place of interest, then you execute a long position. Okay, your stop loss will still be below the swing low, whereby you'll have a way bigger risk to reward ratio because your stop loss will be around this distance while your take profit will be all around this distance. Okay, that is one advantage of having a design to enter a trade. Okay, so here's a market price right now. So this is a place where I was looking to scale into long positions. So maybe you can go to lower time frames, look for structure for changing trend in the lower time frames, meaning minute 15. Maybe you can start seeing formation of change from formation of lower lows to lower highs to shift to formation of higher highs and higher lows. You can see maybe double bottoms there. You can see maybe an inverse HNS. You can see anything in the lower time frames. So this is one of the pairs that I will be looking to trade this week. So in case we have other opportunities during the week, I'll make sure to share, and also ensure that you follow our Telegram group because all these analyses are well detailed, well explained in that platform. And also you can look at the history of all trades that you have ever executed for the last 6 years from 2019 for the last no 2019, that's around 5 years exactly. So there's a history of 5 years of almost all trades that we've ever executed, and they're all well explained. So even in your free time, you can learn a thing or two. So cheers.